Welcome back. Stocks are higher after the cooler than expected inflation data this morning, but some questions now being raised about how much we might trust this print. Our Steve Liesman's looking into that. I'm seeing the Brussels response this morning. Yeah. Dude, that was one flawed report.
That's one of my bullet points here, Carl. And you guys were just talking about this. Stocks loving this cooler than expected inflation report. The bond market and economists highly skeptical, with many saying changes to the data gathering process. They started gathering data mid-month, distorted the numbers. RSM saying, as Carl just quoted, dude, that was one flawed report. Morgan Stanley, a little more perhaps politics, saying this was a noisy print, making it difficult to draw strong conclusions. Pantheon says data collection issues mean trend will only be clear in December. The 10-year went into this number around 412. Rally sold off. It is now highly unchanged, right around 411, 412. So some skepticism as well in the 10-year and the 2-year yields. Fed probabilities also pretty much unchanged. January probability of the next rate cut, still 26%, a little bit higher for March, kind of unchanged for April, and a point higher at 86% for June. So the market, the Fed funds market, not building in any more effect from the Fed from this report. Housing inflation emerged as a flashpoint of debate here. The monthly change now 0.13 from 0.3 before the number, raising a lot of eyebrows among economists. But Blackstone's Steve Schwartzman telling Becky Quick this morning the company is seeing much lower rents in the real world, and they're not coming in. Evercore ISI on the other side of this debate said the report could still matter for the Fed. They wrote, while the Fed will be cautious about potential technical issues with this print related to the shutdown, this report gives some ammo to the doves. Well, I'll have a chance to talk tomorrow to John Williams, New York Fed president, exclusively at 8:30 a.m. and ask him questions about how he read this report. But you know what, guys? I think this is interesting. The bond market, they were not impressed here. Stocks, maybe they're looking for a reason to rally.
Right. I mean, I guess we have heard from places. We've heard from Ivy Zellman, for instance, really notable housing analyst and economist. And this is part of Stephen Myron's point as well, the Fed governor, that shelters just really lag impact, from all of the tighter Fed policy, and that they expect lower shelter prices to start showing up. And you do see that 3% higher shelter price, and that looks better than where it's been.
I think you're right, Sarah, and Myron's been on this. We were on this story a year ago when we thought shelter prices should be coming down, and they weren't showing up in the CPI. So it's a big deal. I think the question is this. You want to know what's happening more specifically in the service sector, ex-housing. You don't really have that data. Look, this could be a great development, and maybe the stock market is right. I'm not here to tell you it's wrong. I'm here to show you that the bond market has a more sort of a little more askance at this number right now, and economists are saying they're not really ready to draw huge conclusions from this number because of, as I read it this morning live on air, Sarah, I didn't know how to read it. There were all these dashes all over the place. So it's a complicated report. I guess the BLS did the best it could with the time it had, given the shutdown didn't end until the middle of the month.
Yes, it was frustrating. I went to my normal grocery basket of goods to try to find out pricing, and it wasn't there. Thank you, Steve.
Thanks, Sarah.